We're waiting for it to go live here, so let's see. We're sending data. Let's see. We're gonna try the new setup here.
Online.
We are online, so I believe we're live here, guys, with show number 11. So we had a 1 week hiatus here, trying to do our new little setup here. So the studio is undergoing some transformational work with a new camera setup that has been kind of hurriedly implemented.
No, the camera is actually still. It's the table that's moving round and round.
That's what it is. Yeah. That's why I'm dizzy.
That's right. I keep getting thrown out of my chair. Now, this is about as impromptu live as you can get right here.
This is super impromptu
We
live.
Literally just sat down, basically.
Right.
We have no idea what we're talking about tonight.
I said, okay, turn this camera here.
I am fascinated by this camera moving up and down on a little train track in front of us.
So if it hypnotizes you and you fall into a form of suggestion, and we tell Mac to go do some things because we're watching the camera go back and forth right there.
Do I need to sign a waiver or some kind of disclaimer or something?
It's kind of like.
I wonder if anyone notices we're one short, though.
Oh, yeah.
We're one short.
We are one short.
No short jokes.
Yeah, no short jokes.
I didn't say we're one too short. We're just one person short.
All right.
That would be Mr. Perry.
Yeah.
Yeah, Perry's
Traveling.
Yeah, still in Costa Rica.
Costa Rica. Yeah.
Yeah, I think he's in midair right now.
Oh,
I don't think he's landed.
Oh,
yet.
he's not landed.
He's on the
Still
way
might
to
be in the
Costa
United
Rica.
States.
Yeah.
Okay, still might be in the United States.
Yeah.
But he's there on business. He is not. He's not slacking.
I hope he has a little fun while he's
Got to
there.
have a little fun in Costa Rica, right?
Yeah.
How can you not have fun in Costa Rica?
I'm looking forward to the stories, though, when he comes back.
Yeah, it should be good.
Indeed.
I mean, it should be some good stories when he comes back. Hopefully he comes back with business and stories.
That's right.
That would be a good combo.
Yeah.
Business and stories.
Well, it's been 2 weeks since we've done this.
Yeah, it has.
So where are we at? Where are we at right now?
Well, the good news is the reason for the delay is we're starting to implement some new things that we'll be able to bring to the world, basically. Oh, the camera stopped here. We might have to make an adjustment. So you guys,
okay, gang, I'm out of here since I'm not on camera anymore. I'll see you guys next week.
This is fun.
This
is good times.
Keeping it loose, keeping it real.
We'll do some camera adjustments.
Did our AAA battery run out?
Yeah, well. Yeah, it's got it's been put through the ringer today, so I think the charge went out on it.
This is precisely why I have this inherent distrust of technology. That and I'm old.
So we're gonna do a little camera change here. Absolutely. Which one are we on?
Someone just joined. Hello out there.
So it's not just me today. If you're looking at it, Justin and Mac, we had to do a camera change. Okay, we'll do that.
All right, let me go get Mac in focus, though.
There is I'm feeling out of focus right now.
This is about impromptu live session.
This
is going to be on the blooper reel. Not the really. Hey, how are you?
Yeah, even the cat's licking away. All right.
Like, what are y'all doing? Yeah, that's better. Scoot this way a little bit. Okay. There you go. All right. We're ready to rock and roll.
We're back. Mic adjustment.
We're just going to have to be a little closer than in this session,
Yeah.
and it's a little easier since there's only 3 of us.
That's true.
Good thing we've all worked together for the last 30 years, right?
Yeah, exactly.
That helps.
Right.
That does help.
And it's nice and cool in here.
Yes. So get back. So 2 weeks since we've done this.
2 weeks. Yeah. To be honest, in that we actually led into the last discussion in the 2 weeks ago was, hey, let's check back on this pricing thing in 2 weeks, because we kind of foreshadowed like what the ride's not over.
No,
I have good news and I have bad news.
Okay, well,
which one do you want first?
Oof, I don't know. I'm gonna go with. Give me the good news.
Yeah, what's
first.
the good news?
You want good news?
Yeah,
first?
give me good.
Right.
Let me good.
Good news is the Fed has not raised interest rates yet.
Yeah, the bad news
is that also the bad news?
That's also the bad news, because I heard they lowered it.
That's also the bad news.
That's the bad news is the consumer rate they haven't lowered it, but the consumer interest rates have went down, which makes the problem worse.
And the other part of that equation is that it's conditional good news.
Yeah.
If you have an asset to sell, if you have a home, a piece of land, an RV, a vacation home, any of the above or all of the above, you're in good shape right now.
Super good shape. So,
yes, that is true.
Yeah, I think as we were starting to, we had a lot going on this week with changing the setup and stuff for the show, and we didn't quite have enough time to dive down into some of the issues that we wanted to get into the last 2 weeks that have changed. But I think maybe for the next week we could take a look at this in a little bit more in depth, because there's some reports out there that I saw that I'd like to print out and send to everyone that are kind of telltale signs of what's going on and the projections of what we see in the future. And I think if we all kind of bore down into those right there, we might be able to give some insight into what we think is going to happen, and just kind of like a preview into that, the things that you look at out there as far as inflation, consumer price index, it's a trailing thing, and it measures, bread, milk, that type of thing right there. But it doesn't measure assets like real estate and housing, right? And how that translates into the rest of the market. So to get a complete picture of like inflation and things like that affect buyers, right? So we're talking about interest rates as the measurement tool of correcting that. Well, what they would be correcting for would be inflation, right? So they're not going to raise that interest rate unless they fear there's inflation out there. And then there's some, incentives for the government not to move that rate, because if they say that there's inflation out there, then what they base Social Security on and government programs and stuff like that, like if it goes above 2%, so they have a 3% cost of living increase, for Social Security and things like that. So if they admit to inflation, it's going to cost the government a bunch of money, and they don't want to panic everyone. So, the argument out there that I see is like, this is all short term and it's going to go away, versus on a long-term argument. So I think if we broke that down and looked at it, is it short-term or is it long-term? What are we really looking at here? Is this a short-term problem?
Short-term as in 6 to 12 months?
Yeah, short-term as in like when everyone starts going back to work from the thing that we can't say on YouTube for some weird reason. If we say that word, we can't distribute our...
And it's what I've started calling that word hangover.
Oh, yeah, the
we
hangover.
are seeing a hangover from that.
Exactly. And so as those things start influencing this market, do people go to work at the lumber mill? And is people not working at the lumber mill the cause for the price in lumber going up? So I saw a thing yesterday that everyone assumes like there's no chicken in the United States right now, right? Everyone's like,
no one to process it.
Well, that's what everyone assumes, right? Well, it wasn't that in the chicken thing. So the chicken, this is really stupid, but they tried different type of roosters, right? And it wasn't, everyone assumes because of the big hangover effect that it's not enough people in the plants. But Tyson came out and said, well, no, it's not that. It's because we tried different type of roosters and they weren't as productive. And so that caused a supply shortage of chicken.
Wing shortage.
Right, but everyone thinks that, the supply, the natural, what's going on, it's not people processing chickens. No, it was something that the industry tried that didn't work. And so I think there's a lot of things out there influencing it, because when you start looking at people cutting down trees, well, that was an outside activity, right? That was really never shut down like if you were in a chicken plant, right? If you're cutting trees down out in the forest, I don't think there was a whole bunch of people that were not showing up to work. So I think it has more to do with when you stop doing business with Canada, right? And you cut off trade deals with Canada and don't bring enough lumber into the market, and then the market goes crazy. So I think if we distributed some reports like that, really dove down into them and started breaking down, is this a short-term thing from the big hangover, Or is it something that we're in store for a little bit longer? Because if everyone came back to work, yeah, I think it could be corrected in a few months, right?
And I'm seeing something a little bit different than that. People ask me every day, they say, what are the factors behind all this? And I said, well, it's kind of complex. Yeah. You've got historically low interest rates right now, and that's creating a lot of concern. People are afraid that they could go up in the future, and they probably will. The other part of it is we're seeing anywhere between a 400% to 600% increase in demand for housing, specifically in our area, but that is spread out all over the U.S. And then, of course, you have the hangover that we just talked about, where you've got low production. And I've been hearing that a lot of the mills, there's plenty of people trying to sell raw material to the mills. Mm-hmm. They're not accepting it right now.
Yeah.
So...
Yeah, and we've been through some weird shortages in the past, and this industry is not not immune to like this problem, right?
No, we're no stranger to shortages.
Yeah, no stranger to the shortages. I mean, concrete shortages and labor shortages. I mean, we've had it all. This is kind of really the first time it's been like such a broad spectrum of shortages, right? So it's usually just been one or two that we have to deal with at a time, and everyone's trying to react to that one thing. Now we're trying to react to all things. Right. How do you react to all things? It's like
Well, it's also it's exasperated too, because you talk about demand being high, and you and I were just talking before this that we're both starting to see people for the first time for a while starting to sit on the sidelines. So a little bit of that is starting to happen now, but demand. What's different is the huge amount of the demand's coming from a side that I haven't experienced before, and that's when we keep talking about.
Just to be clear, you said demand, not demand.
Demand.
I thought he
there's
said,
a deal.
He said demand is high.
Yeah, if you said the man's holding us back,
that's southeastern Texas thing coming out.
Just to clarify, that's demand, not the man.
The man's not coming out.
The man is holding us down.
The man is demanding. The man is demanding. No, we cannot talk about politics or religion. It's off limits. So interest rates are low. People want to utilize that for new homes, obviously, because money's cheap to borrow. But on the other side, we can't ignore there's that huge demand for new construction rental properties.
Yeah.
And we talk about it all the time. I had a phone call this morning from somebody new I hadn't heard of that is a new player wanting to get into the new construction side on a very large scale. So that demand is just being exasperated by that institution, the investment side as well as the buying side.
Yeah,
and it's just compounding.
And what I saw from those reports, exactly what you're saying, Randy, is what's happening is you have just retail demand from buyers and sellers, right? So that's like at an all-time high. And then you throw into it, because there are some people hedging against inflation, they're taking money, and the best place to put your money to hedge against inflation is an asset.
True.
Right? So they're taking their money out and they're going, let's shove it into some physical assets just to hedge our bets, right? Because those big money guys, you're talking about hundreds of millions of dollars, right? So they're going in and they're saying, we need to diversify and hedge against the future. And that's exactly what you're talking about, going there. And now when your supply is already short and you get a new player, and you're not talking about one house, two houses at a time, you're talking about the entire neighborhood.
Yep. Hundreds.
Orders
for hundreds of buildings.
Hundreds of buildings.
And you throw into that mix right now, you get people with these prices going up as crazy as they are. People that 2 months ago were ready to pull the trigger, write a check, get their home started. Now they're looking for rental properties. I mean, they're starting to sit on the sidelines like you and I talked about, but there's not enough rental properties out there.
Yeah.
Yeah, and Randy, you and I had this conversation earlier in the week. Was everyone keeps asking when to buy, and people sitting on the sideline. As great as that is for them to sit on the sideline, what's going to happen when they're not sitting on the sideline? They decide to come back later. They're just paying a higher price.
That's true.
That's the answer to the equation is, if you look at a graph of the stock market over time, what we were talking about, Randy, is like, those ups and downs, that's a super liquid market, right? The swings are huge. And when there's a crash, it's a big crash. And when there's a boom, there's a big boom. In housing, yes, you look at the graph, but if you were to zoom out, the ups and downs in it compared are much smaller, and it's a longer wave because this reaction on this market is so slow. You just can't turn around and because demand's high, turn on every lot that you have to meet demand, because then you'll just short yourself in a few months that you won't have any lots. So
well, that's the issue with our business, is that every minute you wait is like a day of catching up on the backside. So.
Right.
And we talked about it before. We said the publics, they can't stop, obviously.
Right.
So my contention, and I get asked that question from people I do business with, is, man, lumber's so high. And it's starting to come up on the table at our business meetings. Well, do we just buy and wait? Like, do we buy the properties and then wait? And my answer is always no.
Yeah.
No, because we've got buyers for these. They're not going to wait no matter what.
That's right.
And it's unfortunate, and it's tight, and we might do one or two for a little bit more than practice, but you can't wait, because as soon as you wait, you've immediately relegated yourself to the back of the line.
So,
and you just can't afford to do that.
And what we also talked about, in a couple of episodes back is the appraisals. So appraisals, we've kind of defined to people that that's not the actual value of a house. That's just basically the risk, the amount of that the bank wants to take on the property, right? And so as you push those appraisal values up, which we're doing in this market right now, so you're allowing the market to have a new ceiling, and a ceiling that it never had before. Right. And what we've seen in the past is once you push that ceiling up, it doesn't tend to come back down at the same rate.
Right.
It'll come back some, but now you've broke through the ceiling and people can get that price. And so as cost even get a little bit under control, they'll just stabilize, and you'll be able to keep testing that ceiling, and prices will continue to go up. So you might see a dip on the backside of it, but it's going to be a slow dip. So everyone refers to 2008, and I laugh when I hear people say that, because it started in 2006. Yeah. It took 2 years to hit the bottom, right? And the stock market, when it crashes next week or tomorrow or something like that. Yeah. And then it recovers over a period of time, and that tests new ceilings and it goes down. Tests new ceilings, it goes down, right? Ours takes 2-3 years to, so what we have right now is we have 2 years before they can react to the interest rates going up. And I was explaining to someone late last week, I don't think it was you guys, and correct me if I'm wrong, but my parents, when they moved here, they were fighting that 18 to 20% interest in California, and they moved here, and the prices were lower. In California, you've got price and interest rate when it's high, right? At least when you come here, you've got a lower price and a higher interest rate. Right. You can still kind of manipulate in that market right there. But when the Fed decides to raise interest rates, it kind of has this weird effect in our industry. Like, so let's say they skyrocket up to 6% interest rate. That's still a good percentage.
It's ridiculous.
to get a home loan, right? That's just way higher than it is right now. Yeah. And at 7%, people are going, oh, okay, and there's that crossover point where it starts becoming a better rent than it does to buy, right? And then as interest rates climb, you're going to eliminate a whole segment of the market that just can't afford the home, right?
And they're going to be seeking out those rentals.
Or they're going to be seeking the rentals. But here's the crazy thing, is the reason it gets so high in that 18, 19% is because you got a big population of people that have savings. And if the interest rate is 18% and you're getting 12% in a savings account, you're making more in the stock market in your savings account, right? So now you brought a whole new buyer that can afford that thing. So as you're just switching one buyer for the next. Now there's not as many buyers in that higher market. So the answer does curb itself, right? But it's not the end all be all in home building, and it's not just going to like squash us because interest rates go up. It'll initially hurt it, but then you bring a new buyer in, the ones that are going, well, man, I mean, 7%. I like 7% in my savings account. Yeah, that's safer than my mutual fund, right?
And we've all heard the phrase perception is reality, and I think that's the thing now is that if you're local and you've been in our area or you've been in a regional market, right, and you're accustomed to pricing being in a certain range and a certain amount of appreciation year over year, yeah. What we're seeing now is just freaking everybody out.
Yeah.
Unless you're coming in from out of state.
Right.
That's when you're still looking at our regional market.
Yeah.
Cost of living, cost of housing is still lower than just about anywhere else.
If you're California coming to Texas, we're
a kid in a candy store.
Yeah, a kid in a candy store.
Yeah.
Even East Coast coming here. I mean, Virginia or something like
almost
that.
Any place.
Any place
Yeah.
other than Texas, right? You know, but even more specific to that, you know, all of Texas is on fire, but Houston in general is cheaper than all of them.
Right.
So the fourth largest city in the United States is one of the cheapest places to live and make a living in the United States. So that's why we have such an influx of people here and a shortage of housing.
And we've got raw land, undeveloped land that spreads out for hundreds of miles in all directions.
That's a big state.
It's a big state.
I'm not sure at this point where Houston starts and stops anymore when you drive in from the north side.
Yeah.
I think it starts around Huntsville.
I was at a home building charity event last night, and there were builders, developers, and bankers and everybody there, and had a chance to talk to a lot of folks. And they're just like, I was saying, what you guys take on the market right now? And they're like, are you afraid of a crash? Because everybody's asking me, is there going to be a big crash?
Right.
The thing about this is, for it to crash, demand has to come to a screeching halt.
Screeching halt.
And we've still got too many people flowing in by the thousands.
Even as the weird thing about this is, in the whole time in 2006, what triggered that basically was the investors. All of a sudden, they said, "Okay, we're out." They bailed out of the market, right? So the school teacher that was trying to sell her house because it was at an all-time high, all of a sudden couldn't sell it because you took half the buyers out of the market right now, right? Well, this is the direct opposite. You have all the investors coming into the market because it's much safer and more stable, and so you're inflating the natural people into the market. So even if the Joe Blows leave, you've got people that don't buy one house. They buy whole subdivisions of houses, right? And so the person that kind of loses in that is the average Joe trying to buy his first-time house. And if they sit on the sideline, they just might not get a house, right?
That's true.
It's kind of like that Ring Around the Rosie deal, or that little game you used to play where they played the music, and what was that one called when they stopped the music? You had to
musical chairs.
Yeah, musical chairs. Yeah,
is that what they call it? Yeah,
I think it was called
that's
it. Right?
It,
yeah, and the music stopped, and if you didn't have a chair, you're kind of out. Well, that's kind of like the person that just got a job change or something like that. Just a regular person in there, and that's unfortunate because we talked about the iBuyers and things like that. I can imagine. I don't know if there's a report out there that really tracks those guys yet because they're so new, but essentially they're investors into residential real estate, right? So they're coming in and doing deals and saying, "Hey, I'll buy your house and allow you to move to another house," right? Do you think they're selling at the same rate now?
Well, let me tell you, it's funny you talk about that. Is on the radio today, and I was out working. What's his name? Jeff Gould. He does the apartments.com deal.
Yeah.
It's a commercial, so we can say it.
Right.
They had a commercial today that they were basically asking if you had investment rental properties, single family condos, town, list it on apartments.com.
Oh, wow.
Like, go ahead and bring it on over because they're getting huge, they're getting demand for not just apartments like they've been advertising, but they're asking for other types of rental properties.
Wow.
I heard that today on the radio.
That really is a whole new dynamic into our market that we've never had before, right? So you have Wall Street type investors, mutual funds coming in and buying entire subdivisions. You have iBuyers coming in.
Goldblum. That's
Goldblum. There you go. The Fly guy.
Yeah.
Yeah, the guy from Jurassic Park and The Fly.
Mix up with Elliot Gould there for a second.
Yeah, Elliot Gould. So look at all the buyers that you have in the market now. You have iBuyers, and when I counted them, I got up to like 8 or 9 for sure. And those were just the big guys spending millions on advertising. That's not the smaller guys that are just, trying to buy your house in your local market and offering you a deal at this point. So that's just the big guys. Now you got Wall Street coming in there and buying. And they're buying because it's a safe place to put money to hedge against inflation. Right? And so they're not going to leave the market because what happens is they're betting on inflation happening. And if it does happen, it's going to... So if let's say they came out tomorrow and raised the interest rates by 1 point. You'd freak out all the regular people buying a house, right? That would stop them. But all these guys would be like, yeah, I told you so, because the stock market's going to crash, and they're going to go, see, I was in residential real estate, and their hedge against the bet was inflation, right? And so they're going to bring more of them in there. So that doesn't solve our problem. So it's a really complex problem that we have.
Yep.
And I don't know if you could just point your finger to the one thing that is going to, like you say, bust the bubble. I mean,
I think we're going to have like a slow leak. If it starts to correct, it's going to be like a slow leak in your tire. It's not going to be a blowout.
It's like we've got fix-a-flat in. It's like we've got a slow leak because we're always pumping money in and pumping money out, right? Yeah. And it's like we put fix-a-flat in there that is all these other buyers into the market, right? And so there's something going to kind of, if it were to pop, that would kind of keep it up. Right. And it might just not be the regular person buying and selling a house. It's just really, really different. And I don't see, this coming year, we're not going to answer the question in 2021. No. Does the question get answered in 2022? I think that's up for debate. Does it happen in that year? Does something change? Do interest rates change? Because they've already signaled that interest rates in 2022 would probably be the time frame to start moving it up. Yeah. And then they're going to want to test people coming back to work. Does that have an effect? I mean, there's a lot of things to play out. So it's definitely not weeks or months. I think we're years at this point. Is it a year? Is it 2 years? Yep. And then, like I said, in 2006, it took all the way to 2008 to be a bottom. So even if we're to pop, heck, this could be this way for 4 or 5 years.
Yeah, well, you take all of that, what you just said, and then you add in now we all know costs go up and costs go down. They're never static. Right. So at the rate that costs have gone up right now, you talk about what you just said and all of the hedging their money, and there are people running from potential tax increases too and putting it into assets and things like that. But you add to me, it's a heck of a lot harder problem to handle price costs coming down as quickly as they've gone up, because to manage it going up is uncomfortable, but you can manage it and you can expect it. The problem is it becomes real unexpected when costs start to drop like that.
100% agree, because they don't drop at the same rate.
They don't. And you start find yourself racing to the bottom. Right. And you're sliding down the hill versus climbing down the hill, and it becomes extremely difficult to manage.
It's pretty easy to look at the commodities on lumber, right, and go, oh, costs are increasing, and make plans for that, right? But when the cost starts to level out, we don't see that. Equate it to people like buying gas, right? Oil prices change all the time, right? But the price at the pump doesn't change. It changes, but not as drastically as it changes at the pump, right? And so the same thing that you're talking about, Randy, with us is, the commodity price goes up, and eventually it pushes our price up. But our price falling doesn't fall at the same rate as it comes back down. That's why I have to
explain that. I have people that are watching the lumber prices on on a broad spectrum.
I can tell you in a month right now, it's going to be outrageous. In a month after that, it's still going to be outrageous, right? Yeah. But when it peaks across the top and it starts coming back down, we're not going to have that same give back. Yeah. It's going to be much slower. Right. Much slower. And the excuse is, how many times have we heard this? Like, okay, there's a concrete shortage, right? And then finally concrete becomes available in the market, but gas is up, oil's up.
Yeah, something else that affects
something else, right? There. Getting the truck to your job site is up, and like, we can't pass the savings on to you because oil's up, and now there's a surcharge on the fee to get it there, right? There's always something like that.
How many hundreds of times have we seen this over the years? Yeah. Because once it goes up, it tends to never come down. I'm afraid to say this is going to be the new normal.
It's the new normal, and let's say a $300,000 house, because unfortunately, I think that's the price that we're moving towards for an entry level house is $300,000. I mean, it's crazy as that is.
It's a 2-room Coleman tent,
right? Exactly, right. So let's just say what you get for $300,000, right? It's not, if you track that, what you got 5 years ago, 300,000 was, pretty amazing. Right. And now it's not going to be, it's much smaller. has a lot less features in it.
Right.
Right. So size went down, features went down at 300,000. In 5 years from now, that's 350 for what's going on right now.
Yeah.
And over next year, does it become 298 or 299, right? And then it goes to 310, and then down to 312, and then up to 325. See, that's what it does. It slips a little bit and then makes big jumps. Slips a little bit, makes big jumps.
Yeah.
And, I have this discussion with my mom all the time. I said, if she had the first house that she ever built right now, she used to build houses in California for custom homes for $25,000.
Yeah.
Right. That if she had that, it was a 3,500 square foot ranch house. I got a picture of it over there. Right. If you had that house today, what is that worth?
Back when minimum wage was 75 cents an hour.
$2.5 million. Something stupid,
I'll let you
right?
know.
Oh, it's ridiculous.
Yeah.
My parents built their home on almost an acre in 1974 for $57,000.
$57,000.
Still
right?
their home today.
Yeah, exactly. Right.
So I'll let you know at some point in time. But
so when you track that back, in the stock market's the same way. So real estate just happens to be a long-term investment. Someone that gets into real estate and is trying to be liquid, wrong business, wrong market. Right? That's what the stock market's for. This is long-term, right?
Day trading.
Go be a day trader. This isn't that business. This is a long-term thing. Yeah. And this is measured in years and months and stuff like that, not days and weeks. Yeah. So,
and I think the thing that I'm seeing, and I'm dealing with it every day, is so many people coming in from out of state, and they're coming in with families, and that's where it's been different. That's what's different about this particular event, is that in the past, like you mentioned, investors. We always had a lot more investors that were coming in. That was a big part of our market. But now I see this demand is picking up.
Right.
Which is crazy.
Yeah, it's all across every aspect of the market. That's why I just don't see a short-term answer to it. And material pricing, we always have that winter time when things kind of level out. And that's when I would expect, material peaks across the top, because you can't build a house when it's snowing, right? So in the East Coast, when it's snowing up north, it just naturally frees up, some supply to the guys in the South at that point in time. So I see all the way through summer, though. Woof.
Right.
it's going to be a wild ride.
It's wild ride.
And if we've got anybody out there that's watching right now that has a home to sell and they're trying to figure this out, which a lot of people are, a couple of words of advice. Number one, don't sell your home short. Make sure that you're having that discussion with your realtor. You can always come down, but in this crazy market, as Perry has said in previous episodes, don't be excited that you sold it in the first hour, because you probably left money on the table. So that's tip number one. Number two, do the best you can to have a plan B, a fallback, a place to rent.
That's
otherwise,
for sure.
Otherwise, find an overpass, because
exactly.
It's hard to find anything. It's getting harder to find RV spaces right now.
Yeah,
RV sales are up. That's another side deal. But the other part of it too is if you're dealing with a home builder out there, just understand that no home builder right now can give you a firm quote on what their home's going to cost to build.
Yeah.
And you're going to have to be patient. Yep. You have to understand that this is uncharted territory for the entire home building industry. Would you guys agree?
Oh yeah, it's 100%. 100%. Yeah. Well, guys, unfortunately, I think we're out of time with all the technical difficulties that we ran into earlier.
Time flies when you're having fun.
When you're having fun. So maybe next week we can kind of dive down a little bit deeper in the specific topics and stuff like that. But
is there a time difference between here and Costa Rica?
I
need to call him and get him on the phone. Bug him at 2 a.m.
We do.
Exactly.
Yeah.
Exactly.
I think he said something. He's going to Bali next or something.
From Costa Rica to Bali? Yeah, we definitely got to call him.
Yeah, definitely. There's definitely like a time difference there. So
why is that not a team effort? I guess.
Find out if he needs a bodyguard or something.
Needs a private jet, is what it sounds
That's
like.
What he needs. Yeah. Absolutely.
All right. Yeah. Great show, guys.
All right. We'll see y'all.